Alright, time for part two video for tonight. We had a little snafu there with some technology. So we're over here at stockcharts.com, and that is it's a nice website that's out there. It gives you some free information. They also have a paid subscription. Uh, I've used that in the past, but I don't use it today. But in any case, we come here and we type in bullish, and that's for the bullish percent indexes. And just a little refresher for bullish percent indexes. Um, this is a point and figure chart, and it's just another way of looking at how prices move. This happens to be measuring because it's a bullish percent index. Let's actually go in here and type in Apple, just because we can actually have. Let's go up here and type point and figure, and then type Apple. So Apple has a point and figure chart as well, and it's actually up by 1.35% today for what it's worth. It's in a column of O's. Um, there's a lot of things you can do with a point and figure chart. However, I find one of the most useful things is bullish percent indexes. And so we'll look at the Dow here, and this is the Dow Jones Industrial Average bullish percent index. There's 30 stocks in the Dow, and this is telling you that as of right now, 76.66%, which is that pink number right there, of stocks in the Dow are on a point and figure buy signal. Now, the definition of a point and figure buy signal is this: a column of X's was there, and then this column of O's happened, which actually put in a point and figure sell signal, because the minute that O went below on this column to the downside, below the previous O right there, that became a point and figure sell signal. Well, same thing goes in opposite direction for this column of X's. When this column of X's climbed up here and it got to right there, that wasn't a point and figure buy signal, but when it got this new X right there, it was, because that X exceeded the previous column of X's to the upside. There's also one that happened right there, just in the beginning of July, because that's when the 7 kicked on there, 7th month for July. So this is a point and figure buy signal that actually was sort of a secondary point and figure buy signal, because the real one was there. So that's just to show you, this is, so that's a point and figure buy signal on a point and figure chart. But what this is showing you is that 76% of the stocks, of the 30 stocks that are in the Dow Jones Industrials, are on a point and figure buy signal, which means that the other 24% or so are on point and figure sell signals, or at least are not on point and figure buy signals. I think you have to be on one or the other. So that is an indication of buying versus selling. How many of them are on a point and figure buy signal versus a point and figure sell signal? And since the market knows that that's how there are some people in the markets, institutions too, measure bullishness this way, it matters. So, like a lot of things. So this is the NYA, which, well, the Dow Jones has 30 stocks. The NYA's got something to the tune of 7 or 8,000, I believe. Um, so 65% of those stocks are on a point and figure buy signal. And when this thing rolls over to a column of O's, that is weakness, even though it's still on a point and figure buy signal, until it puts in a point and figure sell signal, which can make major sell-offs in the markets. That's so the NYA is the broader market. Today it's down by 0.08%, which is hardly anything. The transports, I don't know how many are in there, but this thing's been at 100% for a while. It actually rocked back to 95, which these things take a 3-box reversal to reverse, so it takes 6% to go down. So we got within a point of rolling over to a new column of O's, which would still have been on a point and figure buy signal, but the new column of O's in this situation, in my mind, is when that happens, this thing's going to fall pretty hard, I think, because it came up this way, and that's a giant column of X's. And you can see previous times when you had a giant column of X's, it got reversed hard. There's no guarantee that's going to be the case because I think we got a pretty powerful bull market right now. And just like the other day, I thought it was actually going to fall, and it sure reversed hard. So the market can do whatever it wants anytime. You just got to remember that, and you just got to stay nimble. So here's the Nasdaq, and 54.45% of the stocks in the Nasdaq are on a point and figure buy signal, which it's up by 1.36% today. And that's notable because really it's been Facebook, Amazon, Netflix, and Google, the FANG stocks, plus Microsoft, Nvidia, Tesla, those big, they're all tech names for the most part. Um, those have been what's been driving the markets, yet only 54% of the stocks in the NASDAQ are actually on a point and figure buy signal. So really those large stocks are the ones that have been driving, and it's kind of interesting to see the difference there. Um, if you want to, you can look at the gold miners. I don't do that very often, but it, it's sometimes good to look at, and you can certainly trade the gold miners. Then we go down. I like to look at the S&P 500 next. There's 500 stocks. 77% of them are on point and figure buy signals, and it went down by 1.28% today while the stock market was pretty bullish, which is just saying that under the hood, 1.28% of stocks in the S&P 500 actually flipped to not being on a point and figure buy signal anymore. And then the OEX is the S&P 100. It's actually down by 1.35% today. 73% of the stocks in the OEX, so 73 out of 100, are on a point and figure buy signal. And yeah, that's same thing. And then the NDX is the NASDAQ 100, so 76% or 76 out of 100 there are on a point and figure buy signal, and it actually went up by 2.7% today. This is where we were on a column of O's in a point and figure buy signal because that's what we got. And you can see it's coming up, and it seems to be coming up hard, and we could possibly reverse back to the upside here. We really need 2, 3. We need to get past the 80 mark again to put in a new point and figure, or a new column of X's, I should say. All right, and then last but not least is our automated trading systems, and let's start with, this is the Dow. So these are futures contracts, and this is the results of our trading for, this is actually a year. No, it's not. It's from January 29th till today. The next one is, this is the results of a year. So you can see today's action right there is just a little blip, but it's a good blip because it's about time we've started seeing this thing come back up again a little bit. This sell-off has been hard to take, and getting a nice buy here in the last couple days has been relief. So, but again, in the long run here, this is, these trades go a lot faster than the rest of the market typically does. Most of the people don't think of the stock market this way. They don't think about, 10 or so trades in a day, or 7 or 8 trades in a day. And so this type of a system actually has its own ebb and flow, just like the regular markets. When we have recessions, we get pullbacks. Well, this has a pullback that's been happening now for a couple months. There's a pullback there that lasted for a couple weeks. There's a pullback there that lasted for a month or so. And so this thing has its own way of doing that. But then the whole time, we start down here and we're trying to, and we got up to here, then we pull back to here. We're just trying to really get this going again right off of there. And the math shows there's, the past performance is not necessarily indicative of the future, but it's the only thing we got. So And then I threw these on here just to show the results for really the recent trading. And you can see this is 726 through 728, 728 being today. This thing traded however many times this is, whatever that is, probably 10 times. I didn't count them. And you can see the net results over here, back and forth. And we've had more wins than losses lately. Now, I can show you plenty of times that we had a giant run of losses, and then I love these times when you have these giant runs of, and we've had a lot better runs than that in the past. So, all right, then the Russell 2000 hasn't traded in the last couple days. This is still what it looks like on a yearly basis, and then I went ahead and threw this on here just because I showed it, I think, last night or maybe the night before. The last time it traded was 725. Since it's automatic, I mean, there's no reason to do anything other than wait for it to trade. Make sure it's on every day. That's really what it is. And then the NASDAQ, which is my favorite, although here lately it hasn't been because it's been pulling back pretty hard. But I wish it would stop doing that. Just flipping on the screen I'm talking about. There we've had a nice run up here in the last couple days, just like similar to, I should say, the YM. So this is the Nasdaq, and it's on a from January until now, but this is on it from a year for a year. And we've got, it's a nice gently sloping uptrend, but this pullback over here has been just tough. However, that's the kind of move right there that move back off the bottom is kind of what you need to get this thing going again. And all we need to do is start seeing some green equity peaks, which means we got to get up above this point here. Um, and based on the way the math works, we should get there. And then I threw this on because it's been, I mean, well, this is a nice few days. So from the 26th until the 28th, sure, we had a lot of trading on the 27th, which will drive you nuts, but we had some pretty good wins in there. And we had a rough loss right there, and I just try not to look at the individual trades too hard. So, all right, well, that's what I got for you guys for tonight, and I hope everybody has a great weekend. Take care.